Hello, I'm Clive Tompkins for the Finance News Network. Joining me from Ausbil Investment Management to talk about its long-short fund is Deputy Head of Equities, Gian Pandit. Gian, welcome to FNN.
Thank you.
Gian, you recently joined Ausbil. What is your experience and what are your responsibilities here at Ausbil?
Thanks, Clive. My experience has been 25 years in the Australian equities market. I've managed long, short and concentrated funds for over 25 years. My role at Ausbil is twofold. I'll be sole portfolio manager for the 130-30 fund to generate alpha. And secondly, and more importantly, I'll be working in the portfolio construction team with Paul Zaradis and John Grace in regards to building all the portfolios and helping generate alpha for all the portfolios.
Thanks, Gian. So can you give us an introduction to the Ausbil 130-30 Focus Fund, its philosophy and approach to stock selection?
Certainly. The 130-30 fund is a beta 1 fund, so we are invested in the Australian equity market. It's benchmarked against the ASX 200. The parameters are that we can be 80% long and 20% cash, out to 150 long and 50 short. So it's taking advantage of all the opportunities, both long and short, to drive alpha and preserve capital. Now it's based on the Ausbil's philosophy, which is earnings drive share prices. And what we try and do is get earnings right and early ahead of the curve to generate alpha. The process is very simple. It's top down and bottom up, and the style is unconstrained. So we do rotate between value and growth stocks to drive our performance.
Thanks. So how is the fund positioned?
We're cautiously optimistic now and going forward to 2016. The key driver will be earnings certainty, and we're happy to be in companies that we can see strong earnings growth going forward in 2016. I think the real risk is that we've had a 7-year bull market here. The Australian ASX 200 is up over 100%, and we're entering another period of volatility going forward. So earnings certainty is paramount. We're quite happy to be in boring companies that deliver on their earnings line.
And Gian, which sectors have the potential to surprise over the next 6 months and why?
We're overweight quality, sustainable yield stocks at the moment. So on a sector basis, we're overweight banks and telcos. We believe in the sustainable yield in these companies, and also they're at the right price for investment. We are also overweight the healthcare sector because we do believe you're going to see further earnings growth in companies like Ramsay and also Fisher Paykel. Consequently, it's not only the stocks that we're long that will add outperformance, it's the sectors that we're avoiding will add outperformance. We are massively underweight resources and energy at this time of the cycle, and we have avoided utilities.
And last question, Gian, where would you like to see the fund in 12 months' time?
Well, Clive, I think I'd like to see the fund achieve its two main goals, which are alpha generation and capital preservation. But I'd also like to see the fund being embraced by the retail network, and hopefully they'll enjoy the alpha generation in this fund, and more importantly, the capital preservation, because if you can't preserve your capital, you can't generate alpha.
Gian Pandit, thank you for the update on the Ausbil 130-30 Focus Fund.
Pleasure, thank you very much.